China has unveiled a new rescue package to aid its declining real estate market. This also comes as the country is facing a deepening liquidity crunch. China's top financial regulators issued a joint notice to banks across the country. They laid out a plan to ensure the stable and healthy development of the property sector. The latest notice includes 16 measures. Now, this includes addressing the liquidity crisis and loosening down payment requirements for home buyers. Outstanding bank loans and trust borrowing of developers can be extended for a year as well. As part of the rescue plan, repayment of their bonds can also be extended or swapped. This is the biggest sign that Chinese authorities are easing their clampdown on the property sector. The clampdown has faced severe criticism along with China's zero-COVID policy. Authorities have been trying to fix China's property crisis in the last few months. Now, they have also cut interest rates and urged banks to extend financing worth $140 billion. Banks are also offering special loans to ensure that property projects are delivered on time. Easing property curbs and pandemic restrictions have led to a sharp rebound in China assets. Now, for more on this, we are being joined by Simon Lee, the co-director of International Business and Chinese Enterprise Program. Thank you for being with us on this broadcast. Now, China has unveiled a new rescue package. Do you think that these 16 measures will be enough to fix China's property crisis?
Now, to me, such measures are not unexpected, and we see many successful stories in the past. For example, in the financial tsunami 2008 and the Asian financial crisis, 1997-98, which involved extensive government intervention. China still maintains a planned economy, and many banks, they are state enterprise. So I think the problem can be solved eventually, because without the intervention of the government, I think the market is not running properly. From many years ago, the property developer, they reported very high debt ratio, but many owners of those real estate developers, they regard this kind of the market structure. But now it's proved that the market structure does not work. So I think maybe it takes a few months that with the government intervention, how home buyers are willing to pay the mortgage, and the real estate developer, they got the money to pay back, to continue with the construction of the real estate development and to pay back the loan. Then it depends on the scale, but I'm not so pessimistic on that.
Right. And Simon, easing the property curbs and the pandemic restrictions has led to a sharp rebound in China assets. Have we seen this?
Yeah. Now, there are two issues. The economy faced, the China economy faced challenges. So I think the best way is to solve the real estate that issue first, because that dynamic zero, I think dynamic zero COVID policy is now being handled. I think eventually with the new cabinets in place in March 2023, there may be new measures. As we see now, the central government is now reformulating its dynamic zero COVID policy. So I think on one hand, that issue affect the economy, and on the other hand, that dynamic zero COVID policy can be eased to stimulate spending. So I think it's a dual purpose.
Right. Simon, thank you very much for joining us on this broadcast with your valued insights there.
Thank you.
WION, now available in your country. Download the app now. Get all the news on the move.